Be able to record. Awesome. Thank you. Just got it. Awesome. So welcome everyone. Good evening, good afternoon, good morning, whenever you're watching this video. Um, Thanks for everyone who's joining live. This is a workshop for financial literacy, business tax planning, and preparation under the Black Startup Project. The Black Startup Project is an initiative led by Tribe Network, and our goal is to support as many Black entrepreneurs across Atlantic Canada as possible by providing them access to resources and funding and networks to help their businesses grow. And so, welcome. I hope you all are all engaged and have a good time tonight and are able to get answers to some of the questions that you have. Um, Joining us from the Tribe team are Julia Ramirez and Katerina, Katerina Masafari. And I believe we also have Deborah Sani, our operations manager, also online. We're going to dive right into it, but before we do, we're going to start off with just a little bit of housekeeping. We're going to start off with a land acknowledgement, a little bit about Tribe, our values, and then we'll introduce our facilitator for the night.
Perfect. So welcome everybody. You feel free to keep your camera on or off, whatever it works for you. But we'll appreciate if you participate. Stephanie's happy to answer any questions as we go through. Or if you want, you can put them in the chat. We will keep an eye on that as well. Also, don't forget to share your link. I'm going to share the link for Stephanie in this moment in the chat. I will be sharing some links there for you to access and to connect with each other. I put the LeBron link here. Let's see if I put the right one this time. Yes, correct. Perfect. So if you want, you can drop your links in the chat as well. We're going to go through the workshop, and if you have any questions as well, we're going to start today by acknowledgement that we are located in the Mi'kmaq, the ancestors and unceded territory of the Mi'kmaq. We are all three people. This land is also the birthplace of Black culture and heritage in what is known as the Canada, following the forcible displacement of people of African descent. This territory is covered by the treaties of peace and friendship with the Mi'kmaq and Wolastoqey, the Maliseet people, first signed I have my camera here, with the British Crown in 1725. Tribe Network recognizes and honors the many nations of Indigenous people who presently live on this land, those who have spent time here, and ancestors who have hunted and gathered across the lands known as the Turtle Island. About us, like Alfred was mentioning, we are the Tribe Network, is a leading technology and entrepreneurship and innovation hub for racialized communities. We're a community of Black, Indigenous, and people of color pursuing entrepreneurship and innovation in Canada. We provide our members access to relevant resources so they create wealth and make the world a better place. Some of our values is that we lead with love, we nurture community, we have inclusive leadership, and we practice creativity. And to start with lead with love, we want to give you the best experience possible. So please do what everybody needs to treat each other with respect and be mindful of the other experience. With that said, we want to open the floor to anybody that want to introduce yourselves and maybe share a little about your background. My name is Julia Ramirez. I'm from Colombia originally, so Latin American. You can also drop it in the chat if you feel more comfortable with that. I would love Stephanie to introduce herself.
Thank you. Okay? I'm not on mute. I'm Stephanie Bolahan. I'm from Halifax. I started my accounting firm 4 years ago, but I've been an accountant for 13 or so years. I've been an instructor in those 4 years for about 3 of them, and have done about 2,500 teaching hours. And my passion, oddly, most people find this quite scary, is tax. And on top of that, I pair that with working with small businesses. Nothing fills my cup more than being able to help a small business in the run of a day, being able to make a difference for somebody who is incredibly stressed out about what it is they do and how the tax part relates to it. Because quite frankly, that's usually cash tax and just books are the most stressful piece of being a business owner. You probably started your business out of a passion and then realized that this ugly side comes with it. This is the part that I absolutely love. And I love nothing more than helping folks get through what is incredibly stressful, and that is business tax.
Thank you so much, Stephanie. So we have Stephanie. If anybody else wants to introduce themselves before we move forward, you're welcome to introduce yourselves. I see a lot of people introducing the chat. Thank you so much for doing that. It's great to see. I see people from New Brunswick. That's a really good to know that we have some people from New Brunswick in the room as well. So if we are all good, Stephanie, the room is yours. So
fantastic. Who you have control of the slides, Julia?
Yeah, I do.
Okay, perfect. So I'll just say next. Okay.
Yes.
Perfect. So I want to clarify a little bit. And you know what? Like somebody in the room might say, why did she just say that? And somebody in the room is going to say, oh, thank you so much for doing that. The tax that we're going to talk about tonight is income tax. There is HST. So that's another form of tax. It's sales tax, and that's paid on purchases and collected on purchases. I'm not going to touch on that tonight. I certainly would answer questions around it, but we're just given the timing of the year. We are moving into income tax season. So that is what I plan to talk about, but I will answer any HST questions. And just to hit that point home, I sit down very often with business owners and do a tax return, and then they say, so that's everything. And I say, no, we still have to do your HST return, which is a separate process and probably more money owing for you at the end of the year. So we're going to focus just on income tax, and I can talk small business. And to me, small business is sole proprietor partnerships or incorporations, limited companies. So none of those are specifically, it's kind of a vague, abstract term when you say small business, but I do mean all of those. And I will specify corporate tax if I have a point that's specific for corporate tax, then sole proprietors. I also realize that being new to business, some folks don't necessarily know their structure. So if you're a sole proprietor, you probably haven't taken any steps with a lawyer or another process to incorporate your business, making it a completely separate entity from yourself. So you probably just called the Registry of Joint Stocks or CRA and made your name a business, maybe gave yourself an operating name. If you're incorporated, there was probably a little bit more that went into actually setting up your business. You either had a lawyer involved or worked through Corp's Can and had to put, together a constitution and some other documents, and it probably cost you a lot more than becoming a sole proprietor. So the reason that's important for tax is that there's a different process, different tax rates for both, but I will absolutely touch on both. So I do hope to talk a little bit about marginal tax rates tonight, the T2125 tax return, which is the tax return for sole proprietors. Somebody already asked in the chat about the T2, which is the corporate tax return. I'll absolutely touch on that in any depth. It is significantly more complex of a process, so I don't want to scare you with my tax jargon, but I will take it as deep as you would like me to. Definitely I will answer any questions, and as Julia said, I would love it if you have a question on a slide or a point that I'm making, if you just let me finish the point and then ask your question. You don't have to get all the way to the end of the presentation and then forget your question or what I was even saying by the time we get there. I'm happy to answer the questions as we go. So next slide, if you don't mind. There we go. Okay, so I just said all this. I obviously in the slides, there's a lot more detail in what I was saying. So income tax versus sales tax. The only point I would love to hit home about sales tax, because I see it very frequently, A lot of folks believe that when they've registered their business, that they've also registered for HST and then start charging. That's a completely separate process. So if you are HST or believe you're HST registered, but don't have an HST account on your CRA account or actual documentation from CRA confirming your registration, I would check that out because it's a big problem at the end of the year. Income tax, though, there's nothing you need to do to register. CRA wants their cut of everything we all do. So this one's automatic. Next slide, please. Okay, so the one good thing about all of the structures is that the equation is the same. Sales minus expenses equal profit. Profit is what you pay tax on. So I could do $10 million in sales and $10 million in expenses, and I owe CRA nothing. It's only the profit. So my net result, my sales minus expenses equal profit. And then depending on your structure is how much of CRA gets of your profit. So quickly, corporations, limited companies, the first $500,000 of their profit is taxed at 11.5%. So it's the best structure for tax-wise, but there's a lot more accounting that goes into it. So if you're not there yet, there's no need to incorporate. But for sole proprietors and partnerships, the tax rates go with the regular tax margins. So the brackets, you may have heard of them, through regular employment and whatnot, it works the same. Next slide, please. Okay, so reporting your business income. So this goes on, as I said, the T2125, if you are a sole proprietor or a partnership. It is not separate from your personal tax return. If you are incorporated, yes, complete separate entity, it has its own tax document. If I am not incorporated, it goes on my personal tax return, and I spend a lot of time refiling taxes every year for folks who didn't realize that they go together. So I go get my T1 general, my regular personal tax return done, because maybe I have a T4 job as well, and I have a side hustle. And I didn't know that my side hustle or my small business that I'm just starting, even if it's a big business that's a sole proprietor, I'm just starting, it all goes together on your tax return. So they get filed together. Your T1 is your personal tax return. Your T2125 is the business statement of business activities, and your business goes on that document. Your expenses also go on that document. So that document is all your sales and all your expenses, and it does exactly the equation that I just showed you. Sales minus expenses equal profit. Then you pay your tax bracket on the profit from the business. That's called the net income calculation. So after I've got the net income, I pay tax wherever my bracket lands on that income. Any questions so far? Am I talking too hard accounting jargon? No? Okay, very good. So then personal income tax. Are there any folks in the room? I know there's a few cameras on. Maybe you know how to use the emojis. Is there anybody in the room who has a business and a job? Anybody small business and a job? Okay, Cody, thank you. Anybody else? Okay, so everybody's fully self-employed? I do. Okay, perfect. So I'm not, this isn't for no reason. So why this matters, if I have a job, a T4 job, let's say I make $50,000 for the year, and then I have my small business as well, the starting point tax bracket for that business is the $50,000 where my employment income stops. They both don't start at zero. My income gets combined, and I pay the tax bracket wherever that falls on top of my regular personal income. This often comes as a surprise to many folks, and it's very similar to the concept if you've ever had more than one job at a time. You probably got a surprise tax bill that you weren't prepared for. It's the exact same concept. both jobs aren't aware of each other, they don't take into consideration the same deductions, you haven't planned for it in the small business, because most folks don't realize that it goes on top of. So you get a tax bill in the first year that is a little bit shocking. Next slide, please. Okay, so on top of that, as a sole proprietor, or even as a partnership, basically everything except for incorporations and limited companies, you also are responsible for the sole proprietor, or sorry, the employer's portion of the CPP. So let's say your small business, and I'll just use a business without a job example here. Let's say I've got a little side hustle, not even side hustle, we'll call it my main hustle. Sole proprietor, I'm doing an e-commerce business. My sales were $100,000. My expenses were $35,000. I come out at $65,000, which happens to be just shy of the maximum contribution for CPP. So what that means, on that income, I have to pay my contribution as the employee, which would be about $3,500. And then I also have to pay the employer portion, which is another $3,500. So on top of the income tax on $66,000, I'm going to pay $7,000 in CPP. It's a little bit more. I'm just using round numbers to hit the point home. But you should be aware that that's your responsibility as well in the sole proprietor and partnership structure. Tax filing deadlines. This one's a little bit backwards. So I actually work a little bit different in my business for how we go about tax filing deadlines, because they don't really make any sense. So as a sole proprietor, the tax filing deadline is June 15th. So I have to report my personal, so my T1 and my T2125 to CRA on the 15th of June. However, the payment for my taxes is still due on April 30th. So how can I pay it if I don't know what I owe? It's almost like a little bit of entrapment here, because I'm going to be required to pay interest from April 30th to June 15th. So the filing deadline is 2.5 months later. Makes no sense. So I really try to have all of the sole props and partnerships that we work with file on April 30th to avoid that. Sometimes we don't have all the money we need to make the tax payment, so that June 15th deadline comes in really handy to help extend me getting the cash flow together to make my payment to CRA. But that it is correct. The deadline for filing is June 15th and the payment is due April 30th. So why not file and pay at the same time and not pay any extra interest? Because that's what happens. The interest starts on May 1st. Furthermore, if you owe more than $3,000, and usually at this point in the presentation, I bring this point up and somebody hops in and says, well, that doesn't happen to me. That doesn't happen to me. Whether you get notice or not, it's still a tax law. It's still your responsibility. So the notices, CRA doesn't do the dog ate my homework type thing. They don't play around with that. You are responsible to know this rule. So if in a single tax year, I owe more than $3,000, I am then required to make installment payments, which is prepaid tax. So on April 30th, I would owe my $3,000. And then on June 15th, September 15th, December 15th, and March 15th, it's quarterly, I have to pay the sum of, and within those 4 months, in 4 equal payments, whatever my last tax bill was. So let's say it was $10,000. I've got to pay $2,500 quarterly before next tax year. So that's usually a really big surprise, because I've got to pay $3,000 on April 30th, and then I've got to pay another, the equal amount in the next 4 quarters to pay in advance. So CRA assumes you're going to have the same tax position next year as you did this year. You could even call and say, I just had a great year. That's not going to happen again this year. And they say, The tax laws are the tax laws. You're required to make installments. But if by chance you don't end up owing that money, you won't be penalized. However, if you do owe it and you don't make the installment payments, guess what? You probably guessed yes, interest, penalties, additional fees on top of the installment itself. So prepaid tax, if you're self-employed, absolutely should be a part of your language and your just your cash flow management, because the installment penalties are actually extensive. I had to make an installment penalty, not a penalty, sorry, payment, personally, and just the way my bank is set up, it was to go Friday, but it post dated and went on the Monday. So one day my installment payment was a hefty one, but the 1 day penalty was $382 on that installment, just interest on 1 day. So I tried to fight it and say it's the way it's set up at the bank, and I already knew where it was going to go. It went nowhere fast, and I didn't see that $382 ever again. So whether you've had some really good luck and not gotten the installment reminder notices, because CRA does send them usually to the folks that have larger installments. But even if you're on the smaller spectrum of the $3,000 and you don't get the notice, you're still responsible for it. So there's no CRA. Cody, I think you're saying if I don't make the quarterly installments, do I get quarterly interest? Is that the question?
No, it was more so, so say you have $3,000 to pay and you pay it over 4 quarters, even if you make the payments, you still get charged interest?
That's correct.
Okay.
Yeah, if you make a payment plan with CRA, they're happy to make payment arrangements and cooperate with, given dates that you're going to make payments, but that doesn't forgive interest ever. Okay. The filing deadline, I'll add this in here. Is it Loopsy? Is that how I say it?
Yes, that's correct.
Okay, thank you. So you're asking for the filing deadlines and sort of how this all works with corporations, with T2s?
That's correct.
Very good. So corporations have a similar setup, that you are required to file your corporate tax return 6 months after your year end. So you get a little bit more time than a sole prop does. So let's say my year end is December 31st. I have 6 months, I have until June to get it filed. However, my payment date is 3 months if I owe after the end of the year. So I won't have a late filing penalty, but I will have interest if I wait to pay when I file. Then the installment piece, sorry that I went fast there. Was that okay? You follow me there, Loopsy? Yes? Okay, perfect. The installments for corporations are then typically monthly. So they want a payment every month for corporations for future payments. And your tax preparer will give you that schedule. And if they don't, ask them, because we have it. Same for sole props. If you don't get that, just ask for that document. We have it when we do your taxes. Sometimes we don't tell you because you're already losing it over the bill you have right now. So we don't want to make it worse. We just put that at the bottom of the pile because it's more bad news, really. So absolutely, if you owe money, $3,000 corporate, sole prop, even just as an individual for tax, that $3,000 threshold holds for everything. Installments will be required.
So I just want to make sure that, because this is a big point. So if I have and it's my first year and I file everything and it say that I go over I am in 4,000. That means for the next year, I have to pay every quarter $1,000 to make sure that I don't incur any interest.
That's right. And I also have to pay the $4,000 I owe now, plus another $4,000 before next tax season. So
is even if I start my business, just
you got it. That doesn't matter if you've been in, it's the $3,000 rule. First year in business, obviously it doesn't apply until you've filed something. So you're on CRA's radar, that they know that you have that overage. but that is the biggest shocker in year one doing the taxes, because we're already 6 months usually past the end of the year. So you've not changed your habits from what you did in the first year. And now you're going to get this bill that you weren't ready for on top of the prepaid bill. And that's really hard to bounce back from. It's almost double the bill, right? In the first year. So I'll fully acknowledge that not every business complies with this, and they use the interest sometimes as a strategy, a cash flow strategy. Because if I can't pay, my employees because I've paid the tax bill, I'm going to go out of business. So, we have to figure out a cash flow management strategy to satisfy both. But sometimes that interest makes a little sense rather than what could be, losing an employee or not being able to get the material you need for a job. We can work with CRA on that. Just know that the interest is always a part of the equation, though. Okay, I love the holy moly. Thank you, Sandra.
Well, I don't think many people are aware of how big can become when you don't pay that installment.
Oh, it honestly snowballs. And because typically learning this information is pretty far into your journey. So you've done a year, now you're halfway through year 2, and you're just going to find it out now. If you're doing your taxes on time, right? This isn't something that comes with your welcome to entrepreneurship package. That doesn't exist. You've got to, either do the research, and the CRA website is not incredibly friendly or, in layman's terms language. So there isn't a FAQ, all you need to know, simple points about navigating CRA and your responsibilities. It's the thing that we kind of hide from because, we're not taught it in school. And then the tools for it aren't that user friendly. So I really understand why a lot of people end up where they end up. And I hope I just catch them before we're 3 years in and they're like, I've never filed anything. I'm like, oh no, right? That's really hard to bounce back from versus the 1 year at $3,000 versus 3 years at $9,000. So it's very situational, but it just is. It's unfortunate, but it is the way that it runs with the installments. I'm just going to take 2 seconds, Loopsy, and read your question there. So if you have a loss, no penalties. No penalties. You're all good. If you are profitable in the next year and you use the losses to cover the next year, also you'll be fine. But as soon as those losses run out, you need to make sure that you're filing on time. And that goes for sole props and partnerships too. If you don't owe any money, there are no penalties. There's no interest, there's nothing. But obviously we don't want to be in the loss position for long. It's great for tax, nothing else though, right? We gotta make a living off of this.
So the application of the installments is if you pass the $3,000 limit.
Profit.
So if you're paying more than $3,000 in taxes, you have to prepare to be paying installment.
You got it. So I got to be profitable, and my tax bill has to be $3,000. Those are absolute 2 requirements for the installment piece. All right, very good. Can we do the next slide? Okay, so these are just things that I put in the presentation because it's really hard to make a one-size-fits-all presentation, and I bet everybody in this room has a really specific setup that while I can give you points and tips and try to lead you in the right direction, I guarantee that everybody's situation is unique, and we could have a very unique conversation about the needs, your accounting needs, and your tax responsibilities and all the nuances that come with it. So I really do try to generalize, but realize that there's some really specific pieces that make your situation different than everybody's, and why I couldn't just make a post here, this is what you need to do if you're a sole prop, and this is what you need to do if you're incorporated, because it doesn't factor in all of the pieces about your unique situation that can have an impact on your tax outcome. So firstly, I do want to just chat a little bit. We've gone back and forth about this a whole lot already tonight. Sole prop versus incorporation or other legal structure. And I do think that it's probably one of the number one questions I get from new businesses, and I really wish that it was more tax related and educating yourself on the pieces of your CRA requirements than this question. Because unless in your first year you're going to have a major year, there's no significant benefit to incorporating right away. And if you've had some losses, then there's some strategy in not incorporating, because those losses can be used against your employment income. So talking to someone before you make a move at all is sometimes worth the $85 or $200, or putting yourself out there tonight to ask the expert in the room who can answer this very specific question about your very specific situation, and take advantage of, you know, what Tribe has done tonight to put this on, rather than, you know, sit on it yourself and stress about it. If you take the time and find a resource, find somebody that you're comfortable with to just say, hey, here's what I'm thinking about doing. What do you think? And you could probably save a whole bunch of money from incorporating, or to incorporate and save a whole bunch of money tax wise. It's the reason I incorporated right out of the gate. I knew for sure what I intended my revenue and my profit to be. So I wasn't planning on, or not going to let CRA take a whole bunch of my money in tax dollars, because personal tax dollar is much more expensive than a corporate tax dollar. So I make sure to set up the structure properly when needed. And I'm only advising here tonight on tax stuff. So don't take any of my advice as legal. Because you may have a need in your business for a liability reason to incorporate. But certainly from a tax perspective, the amount of money that your business is making is the only thing I'd be interested in answering that question as to why you should or shouldn't incorporate. So the right structure for tax efficiency really depends on what the kind of business your business is going to do. Then we have keeping records, and I do have a sub document, if you will. I'll send it to you, Julia. You guys can, if you want to approve to send it out or not. I hadn't thought to send it with the slides, but it's, other than sort of how can you fix my life questions, people say, what do you need from me at tax time? And you know, we tell people to get QuickBooks and use Wave or use Sage and do your bookkeeping, but I don't know that everybody knows exactly what that means. Do your bookkeeping. So yeah, we get it. We buy things and we sell things, and that's the obvious pieces that we need to track the money in and the money out. But there are significant other pieces that are important to keeping records. One right away that I see people do, and they don't realize, you're using your personal property. So you've started a business and now your business is using your computer and all the inventory that you might have purchased with your own money, just using your vehicle and things that you had before you started the business that now the business benefits from. People forget that those pieces certainly can be a part of your tax situation at the end of the year, or part of your bookkeeping process for sure. We say organize your records, and nobody knows what we mean by that, right? You don't do books all day. You do what you're great at in your businesses. So what I mean by that is bank statements, credit card statements, receipts, source documents, anything that's proof of a transaction. CRA doesn't care if you said the transaction happens. They care if you can prove somebody else can authenticate that transaction. So it's very important that we have the proof, the third-party proof. If I can't prove a transaction happened and I get myself in an audit situation, CRA is going to flip that to income for me. So unless I can prove it, it's my income. So it left my account. They will take bank statements for income, but they will not take bank statements as proof of expenses. Kind of unfair, right? But it's very, very true. I recently, and I should say, early on in my career, they did allow it, but now they've tightened up because people have abused it. So you go to the gas station and people are buying things that weren't gas and saying it's gas. So they got rid of it. So what they do is any income coming into your bank, whether you have a business bank account or a personal account, and I very much recommend that you take the time to separate, because if you do everything through your personal account, you're opening that up for audit as well. And while you might not have anything to hide, what people don't realize is that, okay, they won't use the bank statement for expenses, but every single dollar that comes in, you then are obligated to prove it wasn't income. So if, let's say, so your friend transfers you money because you bought concert tickets, I then need something from my friend to prove that that was her half of the money for the concert tickets, not a sale. So it's just not the position you want to get yourself into, that you're trying to prove all of these transactions are or aren't business related. Keep a separate account and keep the proof of all the transactions so that they're explainable. And I can also promise you that at 16 months from now, when you're doing next year's taxes, you're not going to remember. You're going to tell yourself, oh, I'll remember. I have this as an extreme example. A person I used to work with, he sent $70,000 and didn't remember doing it, but 100% had done it. And still to this day, like 4 years later, it got flipped to income for him because he couldn't prove where it went, who it was wired to, and what it was for. And he just doesn't remember. Obviously, he's dealing in really high volume transactions. $70,000 is extreme. However, $70,000 flipped to income because he didn't keep a record of the transaction. Like, how silly to be in that position. Accounts receivable. So anybody that owes you money, there are two types of accounting methods. I won't bore you with them. One is called accrual, one is called cash. So we have different responsibilities in how we report them. And accounts receivable comes into play. So you should have a record of who owes you money at any point, and a process in your business to, however it is that you go about. Mine is Friday afternoons. I read on Google a long time ago that giving people bad news or asking for money on Friday afternoons is a good time because they're in weekend mode and they're going to be more likely to pay. So my accounts receivable process is Friday afternoons, not Monday mornings when they're already stressed and in a new work week. But knowing who owes you money is an absolute important part of the bookkeeping and the tax process. It is important information that gets factored in, more so for the corporations, because you do have to report your accounts receivable. Sole proprietors do not have to report their accounts receivable, but it does factor into your sales numbers, so it's still important. Accounts payable, things you owe. So expenses that you've incurred that you haven't paid yet, they absolutely come into play. So you might only give your bank statements to your tax person, but then you have a bill for $5,000 that you owe somebody. Well, if you haven't paid it, it's not going to be on those bank statements. So there would be another process for that. So keeping that information, having it somewhere, even if you don't do the bookkeeping yourself, put that bill in with your bookkeeping. It's all part of the finance piece for your business. Your sales records. One of the number one audited things from CRA, so typically around HST related, but however, because it's self-assessing, meaning they're going off the numbers you provide, even if you have an accountant, when you're a business, there's no T4 that says, yes, this is what they sold. CRA, you put your numbers into CRA and they trust you or audit you. So having a detailed sales ledger is incredibly important and very likely will be requested from CRA somewhere along your self-employment journey. I'm just going to take 2 seconds and peek at the questions because I can see them coming in. Is grant funding recognized? Yes, and taxable. So it's taxable, but no HST considerations. Could accounts receivable be sales? So accounts receivable are because of sales. So I had a sale and they have not paid me yet. So that's why I have accounts receivable. The money is owed to me, but that sale is still recognized at the time that the invoice is created. So that piece is absolutely important. And Loopsy, because you're incorporated, even more for you than the sole props. Okay, back to my notes. So expense records. So like I said, that they're not going to take your bank statements or your credit card statements for expenses. So if you don't have those documents, and listen, I wasn't born yesterday. I know lots of people have QuickBooks and that bank feed pulls in and you say, yes, this is this expense and this is this expense from the bank. But without that actual document, so CRA, when they call and they say, we're auditing you for this expense line and this expense line, you better have every receipt that came in to making that number, or they're going to disallow that portion of your claim. So it's real easy to process it in Wave even, but QuickBooks is the program I work with, every day. I see a lot of people assume that their books are in great order because it came in through the bank feed, but then they don't keep the receipts. So it's almost all for nothing when we can't prove it at all without a source document.
Stephanie,
Yes.
today, for example, we have a lot of things that come automatically out of our accounts, rent and expenses and things like that. We pay like the cell phone bill and things like that. So for example, the rent, it is automatically, we don't get a receipt for the rent every month anymore.
That's right.
So how we prove this kind of.
I love it. So there's a few pieces there. So I'll address the rent because there's a lease agreement somewhere. So the lease agreement, the rental agreement would be what CRA would ask for. You're absolutely right that commercial rent typically doesn't send you a receipt. I can't think of ever getting a receipt for commercial rent. However, let's say the phone bill that automatically comes out of my bank account, just because it's pre-authorized withdrawal doesn't mean that there was no receipt. So I have to go in my online account at Bell and actually print out every single, or download, I should say, because CRA does have the upload option. And every pre-authorized withdrawal they took out of my account, I have to have a matching bill for. So just because it automatically came out of my account and there's almost no way I could have been fraudulent in any way with that transaction, doesn't matter. I still have to have the source document. Did I answer your question?
Yes, the other question we have is how long do we keep that documentation?
So I've run into, I say so and laugh because the answer is 6 years plus the year it happened in. So total of 7. However, I recently had somebody get audited for 10 years and didn't have the last 3. So the ultimate statute of limitations in Canada is 15 years. 10 years would mean they think something is going on, or you've absolutely done something wild. So I got called into the 10-year audit from somebody who filed themselves and absolutely made some mistakes on their return, but it didn't come out until we were going through the audit process, and there was no documentation. So even the bank didn't have anything. So we put a letter together, and we basically, what will likely happen is CRA will deem what was reasonable within that industry. So if the client had expenses that are way more than everybody else in their industry, CRA is at very least going to reduce it to be the industry norms, if not make it 0. So 7 years is the answer, but I've seen 10 years.
We have a couple of questions in there.
Yes. Okay, so as a sole prop, do I still have to pay the 15%? Okay, beautiful. So this is an HST question. So if you, and I'll absolutely answer it, though it's separate from income tax. If you hit $30,000 in sales, you are absolutely, as a for-profit business. If it's a not-for-profit, it's 50,000. But if I hit 30,000 for a for-profit business, I have to register for HST and I have to charge my clients HST. That's not optional. And you might get by and haven't missed it and hope that they don't catch it and you don't have to pay it. If you don't register and you were supposed to, and somebody figures it out on CRA's end, and I've seen it get missed, and I've seen it get, aggressively collected for a very small amount. The 0 to 30 that you didn't have to charge on, they now will make you responsible for the HST on the full sales value that you failed to register for. And I've had CRA call me and say, one of your clients did $32,000 in sales, they should have registered. And I say, call the client. They'll say, nope, they're registered now. They'll figure it out when they get the bill. Just tell me right off right there. But they feel as though they've made contact with myself or the client. We've been put on notice. That's all they need to do. So there's no like explanation to make sure that the taxpayer is fully aware or understanding what has happened and why they're in that situation. Did I answer, Sandra, your question? Freelance invoices. So I guess
Thank
just
you.
mainly that HST is separate from the tax. Sorry, Sandra, I think I heard you there.
Yes, thank you very much.
Okay, no problem. What is proof of bank fees? That's the one thing they will take from the bank statement as an expense. Funding is not taxed as the profit after expenses. So funding is taxable. It is, there's just no HST considerations. So if I get a $5,000 grant, it's like a taxable benefit to the business. It goes in an other income section, but still, it's still, my expenses obviously will exceed it. That's what funding is intended for, typically to cover. They don't just give you $20,000 to do what you want with. It's going to be to cover a specific project. And I will have had $20,000 worth of expenses or match the grant with those expenses, and therefore won't pay tax because my profit will be zero. But there's absolutely, the grant funding goes on a regular tax line. Okay, a quick question. For some of us who received grant from Tribe as an individual, how do we file this for tax purposes? So that's kind of a loaded question, because if you're receiving it as an individual, I'm not sure I'm familiar, I just need a little more detail, but if you got it as a sole proprietor for a specific project, I don't know if Tribe, you can help me out. Do you see the question? What the funding would be for, so I can answer that question.
We have different parties. It's probably we're talking about like if there is a grant for example, one of the CAS programs. Normally, what some of the grants that we work with, we are paying directly to the consultant. But if
Gotcha.
it is a grant that goes cash to your hand, that it doesn't have an identified specific use, that probably will be a really sporadic grant. That's not the norm, but they could be happening.
Yes, we did have one grant last year called the Start Small Grant, which gave a few founders $500 that will go towards their business. So some of them might have received this directly into their business account or directly to their personal account.
Okay, so like there's a few moving pieces here, but it still kind of goes back to my position that you got the grant, you got a startup grant. If you didn't spend it, it's gonna be taxable. You will have been profitable that $500. Chances are you spent it to start your business, so your net is zero. There's no tax considerations. So it all still comes back to being profitable. The source of the revenue isn't as important. Whether it's grant or sales, there really only difference there is the HST consideration. But if I get $100,000 grant, chances are, as I said, though it is intended for a specific expenditure, I'm going to have $100 expense that's going to net my profit out to zero, and I'm not going to owe tax on it. So the grants are intended to be spent. That's, I guess, where I'm going with that. Does that answer the grant question? Hopefully. All right. Oh, I see your thanks. Okay. Okay, the chat's getting away from me. Here we go. Would you recommend registering for HST right away? Okay, I love this question. So I think yes, but I have a pretty good spidey sense, if you will, about entrepreneurs and sort of the size and scale that their business is going to be. So if you know you're planning to do this on like the smaller side, and you don't want to spend all your profit on accounting fees, then that might just be a little bit more of a headache for you. But if you know that you plan to grow this, and charging HST is going to be a part of your equation at some point anyways, I would much rather start from the beginning and then not have to explain to my clients halfway through why now they pay HST and before they didn't. I do see people that are a little bit hesitant every now and again, and I have clients that are nervous about that, and so they just eat it. They pay the HST for their clients. That's wild to me. The other thing is when you don't charge HST, everyone knows your business does less than $30,000. So if you're out there and you're pretending that you're, really stunting and killing it, and you don't charge me HST, I already know, you're a startup or you're just getting started. So it, as an accountant, that's where my head goes. I don't know if everybody's head goes there, but when I get an invoice without HST, I'm like, oh, I can probably hustle this person a little because they're new. So I just know that, and for me, I want to just be super professional. I want people to take me seriously. I charged HST right out of the gate. But let's say you're making some soap and you go to the farmer's market and you only sell 1 day a week. It's going to be hard to get to, and the farmer's market isn't always, might be hard to get to 30K. So you just have to really understand where your business is going. If you don't even want to hit 30K, you just want a little side hustle, don't do that to yourself. You're shooting for the stars. This is going to be your main source of income right out of the gate. Charge HST. Don't play around. Okay, 30 things. Where's the grant paid to you in cash, but service certain company liable? Okay, so is it Arenzi? I'm trying to see where you're at. Okay, so here's the question says, where the grant is paid to you in cash but provides services to certain value, is the company liable to pay tax on that? So I'm assuming that the grant is just paid to you in your name, but still intended for your business. When you're a sole proprietor, you and the business are the same. So that little detail doesn't take you or the business out of any liability. But again, I bet there's no tax to be paid on it because I'm certain it was spent for business use. Let's say for some reason I just happened to get it December 29th, but my spend didn't happen until January. I am going to pay tax on it. You got to spend it before the year's up. Absolutely. Cody, I love that you said you registered right away. That's good. You gotta flex on them right away. Okay, I think I kept up with the chat there. Where was I leaving? Oh, I was doing my notes. Sorry, about record keeping. So digital record keeping. So paper records and digital records, you have to pick what's comfortable for you. People are always like, how should I set up my bookkeeping? What should I do? You should do whatever you will actually do. If somebody comes in and sets up this Dropbox, great setup, you have no idea how to use it, you're never going to use it. I'm old school. I have paper everywhere. I love paper. So I print out everything. I print out my bank statements. I staple receipts to my bank statements. You've got to just pick a system that works for you. Digital is beautiful, but when CRA asks for documents, they're not worried about it being the original. So you can upload or you can print it and send it, whatever works for you. There's no requirement to be digital. So I just wanted to make that point. Okay, so I guess I got the question wrong. No, I mean where there are services provided in place. Oh, like cash in lieu, I guess. So the legal answer here is whether it's a barter system or a trade system, you are supposed to pay tax on the value of the service received, whether it's equal to cash. So that's what I'll say. The legal answer is yes, you are supposed to pay cash. So if you and someone trade services, you are supposed to create an invoice that would offset in each other's system. So if Cody and I were trading, he was giving me some real estate advice and I was giving him some tax advice, he would invoice me for $500 and I would invoice him for $500. Neither of us would pay, but the service rendered would still be on record.
Sorry, can I clarify a bit? When you receive a grant, but the grant is not paid to you in cash, instead, the grantor provides you a service to the value of the grant they are given. In that case, do you have to pay tax on that? And then how do you present that on your in the statement?
Gotcha. So I feel like we're talking the CAST grant where, okay, where so a service provider is provided for you. So it's just that the cash is mapped to the service provider. So CRA is okay with that because they're still getting their tax money from whoever provided the service. There is nothing for you to record in that case because there was nothing paid to you. If it goes to you first, then you record the grant, and then the invoice from the service provider would then cancel out that grant. So what most CAST grants do is they just bypass the business owner and pay the service provider directly to make sure that everything is handled the way it should be. And then there's less paperwork for you. So if you have been in receipt of a grant that pays a service provider for you, you don't have to record anything on your end. The service provider was paid directly and the expense was then recorded on whoever gave you the grants end. So they give out the money, but they also record the expense on their end. You don't get to then record that expense as well. I hope that answered it this time.
Yes, it does. Thank you.
Okay, good,
Sorry.
good.
Can I ask a follow-up question to that, please?
Yes, you can.
So, in a situation where they don't pay that money to a service provider, but they just provide you with services, right? Rather than it's like an in-kind or something like that, right?
Yep.
How do you report that?
So you're talking, let's say I go to right now, you're here at a workshop that Tribe is putting on. There is, a financial agreement in the background. From their perspective, there is a gain for you guys. There is nothing accounting wise that you have to record. The agreement would just be between Tribe and I. So the service provider and the organization, the paying organization. So anything that you receive in terms of training or resources that don't have any financial, piece connected to it, really CRA is only interested in the cash.
Right.
That's
Yeah.
why the grant cash is taxable. But, if you get to go to a building where they have computers for you to use or host a workshop in their space, that stuff's all fine.
Thanks.
No problem. Okay, so I was kind of just talking about record keeping because that number one question I get when people sit down in front of me is, hey, what do you need from me for taxes? And then I try not to have a heart attack because I'm thinking, you've been in business now for 18 months and you're just asking this question now. So I'll make that document available to you, Julia, and you guys can decide if you want to send it out, just a Word document with some here, get ahead of the tax mess questions. Taking advantage of all this, understand the rules, timing, income and expenses, tax professional. Okay, so I'm gonna attempt, can we go to the next? Actually skip because we hit most of those points in the conversation. Marginal tax rates. Okay. This is either going to be great or you're going to be more confused at the end of it. Marginal tax rates are incredibly complex and there's federal and provincial and they aren't the same. So it makes it explaining all the more fun. What it means is your income is taxed in the bracket at that bracket all the way up until the next bracket and so on. So I'm going to give you just rough numbers to try to help make the point, because I hear all the time people say, I'm in the 50% tax bracket. No, a portion of your income is in the 50% tax bracket, but everything underneath it falls within the bracket that it belongs in. So that is to say, if I have a salary of $150,000, which is right up there with, it's the second from the top bracket. Yesterday, I made $145,000, which puts me under that bracket. Now I get a raise and I'm in the 150. All of my income doesn't jump to the 51% tax bracket, just the new portion. And it's the same in the lower brackets. So 0 to 15, let's say, is not taxable. 15 to 30. Tax bracket 1, 30 to 45, those aren't the actual brackets, I'm just using round numbers, tax bracket 2. So I have different tax brackets all the way up. And that's where earlier on when I said, if you had a job and you make 50,000 and you have a side hustle, your income from your side hustle starts where your employment ends in that tax bracket. So the brackets are just ranges of income that have a different tax rate. And absolutely, there are things to consider. You know, if you're at the 150 and someone offers you a $10,000 gig that takes you 100 hours. Well, remember, 50 of those hours are going to CRA. I might wait till the next tax year before I accept that gig when you get there. And I'm sure some people in the room are, you know, thinking that's a little ways out. But that's the tax planning that needs to take place to make sure that you operate as efficiently as possible and give CRA as little of your money as possible. When I talk about $150,000 and, you know, the six figures and up, generally speaking, you should be incorporated. We shouldn't be talking about throwing away tax dollars in these marginal tax rates because they are the highest. The personal tax dollars are incredibly more expensive than corporate. However, if you're just going to pull all the money out of the corporation, there will be no tax savings. The tax savings come in leaving money in your corporation, so retained earnings. So that piece, the incorporation conversation, other than liability reasons, is incredibly important if you are going to be making in the higher incomes. And then if not, just keeping in mind that the marginal tax rates as you climb, and I absolutely have conversations with clients that are like, hey, 96 is the next bracket. Can we keep our income? You know, we're hovering there. Can we stay at 96 for the rest of the year right now? And we'll up it. Because there are people that absolutely are like, this is the max I'm willing to pay. I'm incorporated, I'm planning, I do my books. Why wouldn't I control what I pay CRA? And as the more expensive tax dollars and the higher brackets, they're more painful. So to think about giving half of your income away when you work so hard to make it in the first place, it kills me. So a couple of points on this page. More money is more money. So I've seen this posted. People don't actually say it to me, but I've seen it posted 1,000 times. I got a raise and now I make less money. Impossible. Absolutely not possible. You cannot get a raise. Your new money gets taxed higher, but you're still making more. It just wasn't as much as you thought it was going to be because you didn't know this piece of it. When you make more, you pay more. That's the ultimate rule of thumb for marginal tax rates. The more I make, the more tax I pay, but also the higher rate I pay. So it doesn't cap out at 33%, which would be beautiful. Works its way all the way up to over 50%, and gets quite ugly. And then the cost of your decisions. So not tax planning. Absolutely have sat down with many folks that were like, if only you had incorporated, or only you had done this way or that way, we could have saved so many tax dollars in having planned or done the bookkeeping and understanding where your business was. Can you go to the next slide?
Yeah, we have a question in the...
Yeah, I was just reading it. How do you figure out what your quarterly dates to report your HST on the CRA website? Saying the date I put is invalid. So if you're on the CRA website and you're under the HST filing section, there is a spot that says filed, view expected and filed. In there, it tells you your HST filing dates. If you're not a regular quarterly is the Q1, January, February, March, Q2, April, May, June, and so on. But it's absolutely on your business CRA account. If you don't have access to your business CRA account, you have to call CRA and get the schedule so that you can file, or just put in dates forever until you figure out what the actual filing is. The good thing is it's always the first of the month, and then 3 months, and then the last of that month. So you could figure it out if you had a few minutes. We've definitely had to do that. But if you don't want to call, okay, gonna do that. And I'm just gonna put the HST phone number in the chat. There you go. That's the number to call. Okay, marginal tax rates. I've already ruined their lives with that tonight. Let's go to the next page. Next slide, if you don't mind.
That one too.
Yes, there we go. Okay, audit. That's like the worst word ever, I know. And to be honest, CRA doesn't do as much audit as you might think on small business. They do what is called a review first. So it's like a sample. They're going to check a couple of things that you have filed. And if you can satisfy them, and it's normally 3 line items, your biggest 2 expenses or 3 expenses and your sales. So when you look at your tax return or you look at your bookkeeping, and you absolutely should look at both, even if you don't fully understand, ask all the questions, sound as crazy as you need to get the answers that you need to understand what's being filed on your behalf. They will ask for your sales ledger in full, and then 3 expenses. So, and all of the receipts for those expenses. Now, they won't ask you for bank statements right out of the gate. And normally people are, freaking out because on the bank statements they're going to see all the personal money you spent and all the things that weren't business expenses that you put in. And that doesn't scare me too much as an accountant, because we account for that for you, and make sure that you're taken care of with those purchases that, you just accidentally used the wrong card or didn't take the time to transfer the money. If you can pass the review, we won't get to audit. If we get to audit, they're checking everything. And then that's the uncomfortable place to be in, because they've now invested somebody in this, and the mandate is, this person makes $70,000 to audit you. They don't want to spend money and not see a return. So they're going at everything. It's a business just like us. So keeping good records and satisfying them right in the review stage is the best position to be in. I gotta tell you, when I file somebody who does their own bookkeeping, I file their taxes for them, and CRA calls me and they say, hey, we want to check their meals expenses, their vehicle log, because the vehicle expense is like the #1 audited thing for 2022. And I bet it's going to be the same thing for 2023. And I'll say, okay, great, no problem. I'll call you up and you'll say, okay, well, I just got to do the bookkeeping. And then I say, how the heck did I file your taxes if you're just doing the bookkeeping now? So CRA thinks the same thing. If I have to tell them I need to buy you time to do the books, not a good position to be in. So normally, your accountant has your back and they'll say, yep, we need 30 days. And then you've got to put those numbers together. You're never going to get the same numbers twice. Just do the books in the first place, keep the records, keep the receipts, keep it all together, or, have somebody help you with it, so that you can make sure that you can satisfy the review. The review is over the phone, uploaded. You might not even actually hear from the person. You'll get a letter. You can upload these documents through your CRA account, and it's really not the scariest place to be. But audits are like in person, at your office, really, really detailed, and very likely, even if unintentional, they're there to find something. Even if you meant nothing intentional, they're going to penalize you. I see this question. If you use your personal money to fund the initial cost of the incorporating the company, is that transaction considered revenue? No, that's a great question. So if I'm incorporated, any money that the business owner puts in the business is just considered either equity or shareholder loan, depending on how you do your books. But it's just a loan, a form of a loan to the business. So that would not be considered income for the business. So no tax considerations. And I actually can take that money back from the business whenever the business can afford it, tax-free as well. It's just money owed to the business owner, and usually just sits there until the business can pay you back. No problem, Sydney. Okay, so a quick couple of notes about audits. Really, I just want to touch on the review situation. The industry you're in absolutely can put you in the flag position. So businesses that they know there's cash, construction, restaurants, they're going to look at those a little harder, because that they're aware of the cash that moves through those businesses that goes unreported. But let's say I'm an e-commerce store. They know all of my sales are recorded through a third-party software for my e-commerce store. It's really hard to not record things. Nobody can pay me online with cash, so not such a priority. But the service-based industry where cash can be, a lot, absolutely comes up. What does this say? But can be considered so whatever the business owner's money, just to go back to that shareholder loan and equity piece, whatever the business owner lent the business money for, can be claimed as an expense. Yes. So that incorporation can be expensed as a legal fee or whatever registration fee to the business. If the money was spent on business by the owner, it never passed through the business. So that's where you make it ugly. So this question says, if the business owner doesn't actually put the money in the business bank account, but still wants to claim the expense for the business, what happens there is, yes, your accountant will map out that transaction properly for you. But mixing your business or your personal account makes that account more likely to be involved in the audit if you are audited. So taking the 2 extra minutes to send the transfer to the business account keeps it cleaner. But also, if you're okay with giving CRA all of your personal your personal bank statements and your business bank statements, then all good. I hope I answered your question there. The money spent, pass through. So yeah, it's just reported as the loan and then the expense from the business. Okay, good. This one's October, December, and January. Oh, you got your HST, Cody. Okay, audits, red flags. I'll give you a couple of red flags that happen often. Changing your taxes. That one, it's a great way to get audited. So that means you filed, your records weren't accurate at the time, then you went and made some changes. Now you want to amend that tax return for whatever reason. That's probably the #1 reason I see small businesses get audited, is because they're trying to make a change to a filing. Probably not your best move. I actually, depending on the change or what the record keeping situation looks like, would probably recommend filing late versus amending, depending on the situation. So it would be situation specific, but I would think that through that seriously before I did anything. So my last piece here, I guess, before I just totally open the floor, I feel like we've been pretty conversational as we went. So one of the top reasons to get audited. Do I have this page on the next page, the top 10? Yes. Okay, there we go. Claiming excessive expenses. So I referenced this earlier. CRA has industry codes. When you file your taxes, you either determine what your industry code is or your tax professional does. If my expenses don't align with the normal expenses within that industry code, I'm likely going to get audited. So what that means, I'm a tax firm. There's a finance industry or accounting industry tax code that I put on my tax return. CRA matches my tax return with other tax firms, and they say, hey, Stephanie has way more office expenses and meal expenses than all the other tax firms her size. We're going to audit those line items. That's what that's used for. Incorrect classification of employees as independent contractors. Yeah, this one, I haven't seen it as much in past years, but I've been seeing it a lot recently. So if you pay someone as a contractor, but by all means, they very much are an employee, you just don't want to commit. So you're controlling their hours, you're controlling the jobs, the work that they do. They are using your computers, your tools. They're everything that an employee is, except for the fact that you won't give them an employment agreement. You want to not commit. CRA can come in and rule them an employee and require you to pay all back remittances for what that position should have been. And I have absolutely seen it. And I've seen it treated one way with one business and different with the exact same type of business by a different auditor with CRA. Non-compliance. So if you haven't filed your HST, if you haven't filed taxes in a while, you're going to get that request to file, followed by a demand to file, and then probably followed up by what they just make up a tax return for you based on, the industry norms for your business. And then collection starts calling you and they're, starting to do asset audits. It really does get escalated pretty quickly. And this has been, and something rolled out recently that said that their penalties and such are going to be even more than they have been in the past this year. It's something that they're upping. So I would say that they'll get more aggressive with non-compliance than they have in the past. Discrepancies, so I said that one, absolutely. Amended returns, changed returns are a problem. And your income or your records not matching third-party information. Inadequate documentation, so they do a review and I can't support everything that I've claimed. Great way to get myself in trouble. Non-compliance with GST, HST, so it's like the departments at CRA don't talk until like it's convenient for them. So if I haven't filed HST, all of a sudden they call the tax department to see what I reported for income, and now they're going to make an HST return for me. But never when it's convenient for us are they going to talk on their end, just when, you know, they're looking to make some filings on our behalf. Tax shelters, so, you know, if you've got accounts set up and excessive RSPs or excessive shelter or charitable donations, things that don't really jive with your income, great way to get reviewed. And then reporting personal expenses as business expenses. So doing a little too much on the bookkeeping side, throwing in some personal stuff that probably doesn't belong there. And then the random selection. So that's actually the only blurb that comes directly from the CRA. The rest is from studies that I've followed for a while. The random selection is very, very convenient. It's, you know, you do business with somebody who's been audited and didn't do great in it. Your name came up in a source document. So they're making their lists from, you know, if this person doesn't do great business, they probably keep people around them that don't do great business or don't do great records. So we found money here. Well, let's get money from their friends too. And then anonymous tips, I think, are more where the random piece comes in than actual, you know, what the definition of random would be. I think that is the last slide. Every tax situation is unique. I touched on this in the beginning because we're given general advice here, but everybody's situation is so specific. I hope you got something out of this, but as I said, I'm happy to open up the floor and answer whatever you guys want to throw at me. Sydney, go ahead.
Thanks for the presentation today.
Oh, no problem.
I'll turn on my camera so at least you can see me.
Thank you.
So my question is, so let's say for some reason you get in trouble with the with CRA and trying to figure out how to get yourself out of that situation. Who's the best person to help, the lawyer or an accountant?
Okay, so that's a great question. I would go accountant first, unless you've really been, you know, there's a liability component here where you've been negligent or not truthful. If it is misunderstanding, non-compliance, filed incorrectly, just all the things that happen to small business owners, like so unintentionally. Get an accountant who does it with a little bit of heart, but also feisty and doesn't mind fighting CRA. I'll plug for myself there. But someone that's gentle, like that, will let you totally tell the whole story and then give you a way forward. And to me, that's an accountant, unless you've like really done something wild and you're going to end up needing a lawyer anyway.
All right. Thank you very much.
No problem.
I
Any other
also have a question.
Yeah.
You mentioned that you use QuickBooks. Do you think, what are the other accounting software that you would provide both for small businesses and sole proprietorships and incorporated businesses? Great
question. So I would say Wave is free and it's significantly better than not reporting. It's basic, so a lot of business owners will outgrow it, but it's such a good spot to start. QuickBooks is pretty, you know, extensive and can intimidate some folks, but it is very user-friendly too. So you kind of have to, you know, if you're techie, you're going to be fine with QuickBooks. But if you're like me tonight, where I was like, oh my God, I don't know how to get the link. I don't know how to start. Like all the tech stuff scares me. I know 3 softwares like really, really, really well, but introduce me to a new software, it's going to be a nightmare. I would say Wave is where you start. FreshBooks is for like designers and architects and people who do like project-based work. QuickBooks can grow with you. They have self-employed, easy start, advanced, like there's all kinds of levels of it. And I like cloud-based because I like to be able to send my invoices directly to clients. So all three of those that I just listed do that. But before I got in with QuickBooks, as heavy as I am now, I did spend 10 years using Sage first. And I wouldn't actually recommend Sage. It's really expensive. You're going to need to take a course or 5 to learn how to use it. I made a huge mess of it and had 6 years of schooling before I ever used it. And for the first 2 years, it was way over my head. For small self-employed, I would absolutely go Wave, QuickBooks, and or FreshBooks. And Excel. If none of those, Excel. Put something down. We can work with an Excel spreadsheet. Any other questions?
If no one else has one, I will go.
Okay.
I'm doing my first HST claim, but it's a pretty big one. Woohoo to me, but I've been getting billed by NSAR, which is my association, and there's HST in each single one since like, last January. And, I'm supposed to do it quarterly and I haven't claimed any of them yet. So can I claim them all on this report or?
Yeah. So what that's called is an ITC. So if I'm HST registered, the HST that I pay on purchases, I get refunded from CRA. And those are good for 4 years.
Okay.
So if I miss it on one filing, I can put it on the next filing and be completely audit ready with that. As long as I have to be able to prove I didn't file it twice.
Right.
Just in the one period.
Right, because I'm doing the file right now and I've got 101 filled out and I've got 105 filled out, and now I'm just doing the subtraction off what I already owe for the.
You got it.
So.
Yeah, that's
Okay,
exactly right.
All right.
Good job.
Thanks.
Any other question?
I was going to jump in. Oh, sorry, anyone still speaking?
Yeah, I can
Can
hear
you guys
you.
hear me?
What's your name? Trying to get to you.
Oh, awesome. I wanted to find out, Loops, this is Loopsy speaking. Hi. I wanted to find out if, can you hear me? My internet's kind of bad.
Yes.
Okay, awesome. So when I pay for software, there's a section at the bottom that says GST, HST, and says if you're an organization, put in your GST, HST number, and I put that in there, and I'm not charged GST, HST for the software I'm paying for or any product. Would that come back when I'm filing that? Because I know I'm not paying for it right now, does that mean I will pay for it during my filing?
Can I ask what software? This is new for me.
They vary. So for example, like UX software, it's like something like Telerik, for example, for software tools and implementation.
Okay. Is it a Canadian-based company or a US-based company?
US.
Okay, that's the reason. So US-based companies, we don't charge them and they don't charge us. So HST is only considered domestically, so just in Canada. So you're not going to pay any HST on it, and it's not going to factor into your HST report at all, but it is still a regular income tax deductible expense.
Okay. Awesome.
All right, good. Any other questions?
It seems like that's it. Thank you so much, Stephanie. Everybody, we just put the link to get your feedback and see how the workshop was. It's also to ask you some questions about what other workshops will work with that. Thank you so much, Stephanie. This was such a good information. I've seen so many of these presentations, and every time something comes in, I'm like, I forgot that. It's so good to hear it again. If you need other resources or you wanted to reach out to us, I'm putting also as well the links to connect with Katarina or myself if you want to talk about any of the services that Thrives can provide, or if you have any questions, we're happy to sit down with you. As well, I put a link, Stephanie's link in the chat as well, if you're looking for connecting with her directly. This is the first one of 7 sessions that we're going to have in financial literacy. If you want to register, you can register for the future workshops. Our next workshop is credit building. I'm correct? Credit building. That is going to be next week. It's going to be a really interesting workshop, and you will learn how to make sure that you get your credit score up as much as you can. So you can register directly. And any questions or anything left? Anybody that has any questions? Anything left in the chats?
I was going to jump in. Well, thank you very much, Stephanie. I just seen your email. Thanks.
No problem.
There he goes. Thank you so much, Stephanie. This was so good.
Thank you for having me. I really appreciate it. I could talk tax all night, so I'm glad we had the slides to keep me on task.
Thank you, everybody, for joining us, and we look forward to seeing you in our next workshop. And please fill out the feedback. That way we know what other workshops we can organize and give you the information. And thank you so much for joining us tonight.
Thank you.
Thank you.